Let's bring in George Tsilis, Senior Markets Correspondent here. George, we're talking Cisco. Big announcement yesterday morning. Potential takeover of Splunk, $28 billion. George, they got $157 as far as the price target for the takeover goes. You've got Splunk trading $145, but Cisco, historically we'll see that. Cisco took a big hit yesterday after the announcement.
Yeah, they took a big hit based upon the price of the acquisition, plus it's an all-cash acquisition. In fact, if you look at Cisco's balance sheet, they have enough cash to make this deal happen. I think, of course, there's some arbitrage going on behind the scenes and why Splunk is actually trading below the acquisition price, because at the end of the day, Splunk's board of directors have to approve the deal, and until that happens, we probably will see the stock trade below the acquisition price. But nonetheless, I mean, if you look at Cisco just organically, the stock has performed quite well, irrespective of yesterday's pullback because of the acquisition, which typically happens when the acquirer makes a big buy to purchase another company. But if you look at Cisco in the last year, they've done very well, about 30%. They're a very profitable based business. They've been expanding their software-defined networking alongside their cybersecurity, and the Splunk acquisition makes complete sense because if you look at Splunk's business, it's really about data analysis as well as platform observability, both for IT infrastructure and networking. And this essentially bolts on additional service provisions that Cisco can offer as a subscription to its major customers. Now, last quarter, when they reported earnings in August, sales were robust at 16% higher year over year. Earnings were higher by over 30% year over year. While at the same time, their subscription revenue was higher than sales at 20%. So the company's done extremely well from the standpoint of its fundamentals, its earnings power. Not to mention, you know, when you think about artificial intelligence, everyone looks at NVIDIA first, but you have to think about the complementary technologies. Companies like Micron, for instance, provide the high bandwidth memory, but also you have to think about high bandwidth networking, and that's where Cisco really shines. That's their core business, and I think that's why the stock is traded higher, plus the fact that sales over the last year have been pretty robust at over 10%, especially going forward. They're still expecting about 8% sales growth, which is about 6% higher than their 5-year average. So they've been growing their business organically and inorganically. I think this acquisition also makes sense.
You know, George, Cisco says they're going to be cash flow positive on this deal and gross margin accretive in the first fiscal year. They're going to be accretive to adjusted EPS in second year. This stock doesn't trade at a very high valuation, George. It's got a good dividend, so therefore it's not going to overreact in any market downturn. Isn't this stock, this company, set up very well to buy a company like this? Because what they do spin off, what they do create is free cash flow, and they're using it now to grow their company and get into AI, basically, which is what Splunk's part of their rally this year was excitement over AI, George. It looks like on the surface that these two companies fit well together.
They do, and it really fits with the new business model that Cisco has manifested into over the past 6 or 7 years. They've actually now are integrating horizontally their hardware alongside now software-defined networking, cybersecurity. So the service provisions, which again are recurring in nature, are really where the business shines now, and that's very accretive to margin growth. If you look at gross margins, they've been expanding alongside sales at around 63% of sales in the last 4 quarters. If you look at net income at 22%, that's also above their 5-year average. But also considering the forward revenue growth, which is expected to slow down just a little bit. I think there's a little bit additional hype based upon artificial intelligence, but they're still expecting about 8% sales growth and even EBITDA growth that's over 4%. Now that's again about 130 basis points higher than their 5-year average. So you look at their net income at around $12.7 billion on $57 billion in sales. It's really high at 22%, especially for a company that's still at its core a hardware company, a network gear company. But again, they're complementing that very well with services and, of course, networking and cybersecurity. And I think the Splunk acquisition makes complete sense, and they certainly can afford it.
Hey, George, real quick before we let you go, does this open up, maybe the possibility that we're going to see more M&A activity as some of these smaller companies get scooped up as growth slows?
I think it could be, yeah, especially when you think about the complementary technologies. There's a lot of other network geared companies out there. NetApp is one of them, Juniper Networks, and there's a lot of other competitors like Splunk. For instance, Datadog is one of them as well. So I think there's certainly room for more acquisitions. There are synergies, especially now when you're integrating networking alongside hardware, cybersecurity, and of course, data analysis and artificial intelligence. It makes sense, economically speaking, financially speaking, but it's too, of course, speculative to say which companies will buy out who.
Yeah.
But I think this establishes more of a norm that again makes sense from a horizontal standpoint.
Yeah, maybe accelerate growth in some of those companies that are kind of moderating at this point. All right, great stuff. Thanks to George Tsilis here, Senior Markets Correspondent, breaking down the Cisco news.